Marley Kayden, host of Market on Close, is with me to take a look at those expectations for Oracle. Marley.
Good morning, Nicole. Yeah, Oracle has some big expectations this morning and several key metrics that the street is looking out for. First, it's their first quarter, their fiscal first quarter. Their EPS expected to come in at $1.47, which if it hits in line would be up 6% year over year. For revenue, expected to be about $15.01 billion, so just north of that $15 billion mark, which would be up 13% year over year. Now, Oracle does provide cloud infrastructure, but is often overshadowed by some of the larger cloud providers, as it only has a 2 to 3% market share of storage as a service. Its major competitors, obviously Google Cloud, AWS, and Microsoft Azure. But Oracle is differentiated because it also has deep roots in enterprise databases. So it's not just a general cloud provider, but it specializes in providing data as well as enterprise resource planning, which companies use to manage their whole systems, anything from payroll to inventory. So rather than competing with these hyperscalers, Oracle partners with them so customers can link their entire enterprise data to Oracle's cloud infrastructure, but also use Oracle's software. So this makes them somewhat indispensable as switching costs have become really high to move these databases. So Oracle has continued to see really impressive growth in its cloud services and its license support revenue. It's growing really quickly, 70% year over year from fiscal year 24 to fiscal year 25. So that metric will be a key figure that's continuing to be watched. Also, high debt is a huge concern here as well. Any slowdown in revenue growth or net income with the valuations being so closely monitored will be a concern here. All of the analyst notes that I read, Nicole, mentioned the prisoner's dilemma, this CapEx spending prisoner's dilemma. There's this need to feel like you have to keep up when these other competitors are raising their CapEx spend. But the issue is that Oracle doesn't have the cash and they already have a great deal of debt. So that will likely be in big focus. Can they keep up? Are they keeping up? And are their margins at least staying where they were? That'll be a big focus today.
Yeah, without a doubt. I think talking about the competitive landscape, too, you mentioned AWS, Google Cloud, Azure as well. Oracle certainly has surprised folks. It's been a great performer this year, but, that's part of the big story here and what they can they have more penetration and get more market share going forward?
And I think most of the analysts feel that they can. As far as ratings, 68% of the analysts who cover this company have a buy rating, 0 have a sell, 32% have a hold. But all are favorable because they have that differentiated approach, because they don't just offer software as a service or the cloud services, they also offer infrastructure as a service. So instead of having to have two providers, you can simply have Oracle. So while they may have a considerably smaller share in terms of cloud services, they do offer additional services. And also with that debt concern, last week we did get the reports that JP Morgan and Mitsubishi UFJ are readying a $38 billion debt package to help fund some of their data centers that are tied to that Stargate project that they're working on with OpenAI. So that will likely also be a big potential catalyst for them, and also likely a major focus. As they've said, it could generate up to $60 billion in revenue annually, and that would just further increase Oracle's growth rates.
All right, Marley Kayden, great to see you. Thank you so much. Good luck there at Oracle, which right now at 235, down 1.3%. And we have a lot more for you on Oracle. In fact, we're going to go ahead and trade it. So let's take a look at that. And we have Tim Biggam with us, options strategist at Pilot AI. Good morning to you, Tim.
Good morning, Nicole. So yeah, looking at Oracle, this is a stock that certainly has come off, the highs fairly sharply, kind of along with the rest of the market here. Valuations, as you alluded to, at historic extremes, but most stocks valuations are at or near historic highs as well. So doesn't differ from many of the other AI related stocks in that manner. So it'll be interesting to see how the stock reacts with earnings. They'll probably come out, in my opinion, and have a slight beat similar to all the previous ones, the Nvidias of the world, if you will. But the stock reaction, I think, may be a little less muted. And here I'm kind of, because of the recent pullback, slightly bullish here, more capturing implied volatility on this trade, selling this week's out of the money 255 calls buying next week's 255 calls, paying under $1 for that trade. So like the risk on that trade. More importantly, selling about 125 IV, hedging by buying a 75 IV. We know post earnings, when the unknown becomes known, that term structure vol will flatten here, which is a nice edge. And I think, given the fact that the market's waiting on the Fed here, I think stocks will pretty much be on hold here going forward, and Oracle being one of those. So market makers implying about a 9% move on earnings. I think it will remain between that upper and lower boundary and below that kind of 260 resistance level near those recent highs.
All right. Thank you for that. So we'll watch for that today. We'll have that for you here on the network. How about just your big picture thoughts on the market? We've already had some back and forth action this morning. How are you feeling?
Yeah, I think what you were talking about in the previous segment, where the spending for AI, right, the CapEx, will that be justified or not? And certainly Oracle representing one of those names in a big way. But the Microsofts of the world, how much they have to spend, Meta and the like, to kind of build out this AI, the big kind of hyperscalers, those big data centers, the amount of energy required on that. Will that be able to be monetized or not is the really trillion-dollar question. Difficult for me to see at the end of the day how all of this plays out for everyone. I think you'll have some winners, but a lot more losers here as everyone's in this kind of, if you will, gold rush to get into the AI game. We usually know how that ends, and I think the market is probably due for a pullback here. We really haven't had any meaningful pullback since those Liberation Day lows.
So, on a pullback, would you then consider buying? What kind of sectors maybe seem to be winners to you going forward, or even names? I mean, I don't know if you name names, but.
Yeah, absolutely. The beaten down names, the kind of ones that have felt the wrath, if you will, of AI. I'm looking at stocks, for example, like Adobe, which has been beaten up because it's lagging in the AI game. Valuations are becoming very attractive. They're trading at decade lows, right? Whereas most other stocks like Oracle, decade highs here. So I think this rotation out of these hyper growth names into some of the more heavy value names will probably occur. And especially with the 10-year yield around 4%, we may get those rate cuts, but it might be for the wrong reason, right? It might be because growth is slowing. So I think it's a place where you may want to at least move somewhat into the lower beta, lower valuation names, and maybe pay a little bit of a divvy as well and kind of lean on that for the next several months.
All right, Tim Biggam, option strategist, Pilot AI. Great to see you, Tim. Thank you.